Hello guys, let us start today's analysis. Today is Monday, 6th May. As we do, let us mark previous day low and high. So previous day was a quite trending day. So high is here and low is here. So PDH and PDL we have marked. There seems no important levels except this. This is called a swing high because market tried to reverse, but then again it fell down. So this point is also an important level, but as long as such levels falls within the CPR of the next day, there is no need to mark those levels because CPR itself is a big indicator, and we can follow the CPR instead of such swing highs for the previous days. With these two, let us start today's analysis. Today's CPR is quite wide and it was expected because trending day has happened. So once there is a trending day, next day can be a wide CPR, and it is vice versa. When it is sideways day, next day will be a average to narrow CPR. Now here, if you see the first candle, whenever market opens, we have to start from the first candle, 9:15. This candle, although it is complete red candle, this is there is no entry on this candle because it has opened and closed within the CPR. Whenever there's no trade within the CPR unless there is a CPR breakout or there is a big fall from the top and then it reverses within CPR, or other way around when there is a big upside move on the CPR and then again it reverses. So for the first candle there is no trade, second candle also within the CPR. Now third candle has broken the CPR. Now here you, like, the risk reward is not good because okay, there is one, like, as long as we are going with this analysis, as in when required, or I remember, I'll tell you small insights which you should remember, which you will gain with your experience and whatever know-how of the technical analysis. So usually when such breakout happens, this is a power candle. Actually, this is very strong candle, but it opened and closed at the wrong location. The close, if you see, generally the candle, at least more than 25% of the candle should break whatever it has to break, because the candle has started from here and it has broken a small portion on top. So and if you enter here, what is your stop loss? You cannot have stop loss below this. You have to have a stop loss below the day's low, and which is a huge stop loss. And for the target also, the risk reward ratio is not good. The stop loss is huge, and you just remember, always remember that never enter on the big candles. There has to be a proper risk reward. Now, so there is no entry on this candle, and if you see the next candle was trying to take a support, and the candle after that has broken it all. Okay, then it has broken the low also. There is no entry on this candle as well because it is just closing on the support of 20 EMA. In such situation occurs, there is no entry. There has to be some clearance. There has to be a space for the candle to move down or up. So there is no entry on this candle also. Then I think in previous videos, one or two days back, I have explained you the M pattern. M pattern happened on here. Yes, the first candle is green. Okay, it reached on the top, and after consolidating, it has shown this this bearish candle, and this is a setup of M pattern. Similarly, there is W pattern just opposite to it. W pattern. The condition of W pattern is the first candle has to be red. In in M pattern, the first candle has to be green. So, and the W pattern works like, if there is a red candle, then it should go down whenever it has to get its initial balance low. Initial balance low means whatever happens in first 1 hour, it's called initial balance high and low. So for 1 hour, this is the high and this is the low. Now within within that, if you see, market has taken support here and again bounced. So when market has to take at least 40 to more than 40 to 50% of the total range. This is from bottom to top is the total range, and when it falls, it has to again go back at least more than 50% of this range. So it has reached here and then again it fell down, not this point, this point exactly. If I draw a line here, this is the line. Okay, this is horizontal. You can see this candle would have been a candidate of W pattern, which means this bottom, top, and this again it retraces. This is not a properly bullish sign. There is a wicks on the top and the body is small. So um, this is not a proper bullish sign. So we have to wait for the next candle. The next candle could not break the low, but the wicks has gone down. Suppose you would have taken the entry here, your stop loss would have hit with this candle. Now, now this candle has broken the range. So probably you will think that this candle is a good candidate to go short in the bottom, keeping stop loss here. But we should avoid this. There are few reasons, but the most important reason is the CPR is wide. Whenever there is a wide CPR, remember it is reversal or sideways days. And on the wide CPR, there are big chances of false breakout trades. So this, the next candle has broken it, so you should go long on this point. You should have a stop loss below that candle. So this is day's low as well. This always there should be a small clearance whenever you put the stop loss. Now when we take long position, just click long here. What is the position? Entry point. This is the entry point. Put the entry point and your stop loss will come in the green, red. So you put this you should have little tolerance, because sometimes the candle has a tendency to go to the stop loss and goes and hits target. And as I told you, it has to be 1:2 risk reward. So this, where is the risk reward here? It is 1.58, so you have to increase this point. So let us see. This point is how much it is now, 2.02. Yeah, somewhere here. This is 1:2 risk reward, which is exactly the bottom CPR. Now CPR is not coming in the way of your target, so you can enter here, this point. When you enter this point, your stop loss should be here, and that's it. Then the the trade is locked. You should not change it. You should trust your setup. And in this case, what happens, it tried to go up but could not reach the target, came back again, went up but could not reach the target. So in this case, it's a break even trade. Neither stop loss hits nor profit target. Now you will say that it is exactly touched here, you should have taken my stop loss. Okay, now you should, guys, remember one thing: there is no perfection in trading. If you want to have everything perfect like my setup and all, it will never work. Trading is never like 2 plus 2 is 4. So trading is a science. It's not certainty. It's a probability. So you should not, like, just below this. So whenever you put loss, have some clearance, just a little clearance, and still your stop loss hits, then get out of it. So that's the way. Even if you want to follow those exact stop loss, you should have little points clearance, and if still it hits, fine. Let us That is the way market behaves. Now we should only be right more than 50%. That's our aim. If you be correct more than 50% times, you will be a profitable trader. So today is a break even trade. There is no profit or loss, and that's how we should save our capital also. Instead of entering anywhere, there are certain rules and some strategies and mainly logic. Why market behaves like this, why this green, why red, why, which is the level, what is the important level. Although you don't see anything on chart, but unless you mark CPR 20 EMA, you will not understand why market is why market is not gone up, why it is reversed from this side, and so on and so on. So that's it, guys. Thank you. Bye bye.